Hi there guys, it's Joel here from Trendsignal. I'm going to be showing you the trade of the day. We did a member session this morning, kicks off at 8 o'clock, goes on until 10 AM, and I'm just going to be showing you the trade, the best trade that we took in that particular session. There was a couple of nice ones that happened earlier on, but I'm going to be showing you this last one that ran actually until past 10 o'clock. But let's work out how it went down. So what we're looking at, first of all, we're looking at German 30 or the German 40, also known as the DAX. On my screen here it's shown as mini DE30. We're looking at the 2-minute time frame and we're looking at entering a trade on this market. So what has happened? We've got a couple of simple steps. First things first, you can see there was an arrow here where my crosshair is circling. The market touched that arrow and the arrow flipped. The arrow then flips and it's pointing upwards starting from the bottom. So this is my first thing that I need to pay attention to. Second thing, I need to look up at where my candle is, and in the middle there is these two green lines. I have to look slightly backwards, the space between these two candles here, and in that space, if that is green, which it is, that means I can look at entering a buy trade. Because this arrow is inside of the blue line at the bottom here, I have to confirm with two final steps. The first is that this central line is going to be blue. That's good. That means it's moving upwards. As you can see here where it's orange, that means the general market trend is moving downwards. Shouldn't be taking a buy trade inside the blue at that point. But here it's upwards and blue, so that's good. And then finally I need the price to be above the pink. You can see on our open candle the price is well above the pink. So I enter there at the beginning of this candle at 22585. Now, my stop loss, initial stop loss, is where this black arrow is, and it's set to 22498. So I've got an 87 pip stop loss. 22498 to 22585, where we're entering, 87 pips. 87 pips a stop. We're going to risk 1.5% on this trade. Depends obviously on how big your account size is. But our trade is worth 1.5% to an 87 pip stop loss. Our basic traders, those that have just started out with the system, want to have a high win rate, they will be looking for a 10 pip profit from this market. So they need it to go from 22585 up to 22595. And you can see there it hit it at this level where my crosshair is, and you can actually see our first candle, the wick went above that. The wick went up to 22598. So the first candle made 13 pips. Anybody that was taking this as a beginner phase 1 trader would have been out of that for a profit and then made themselves around about 0.25%. Nice and easy. For those of us that look at it in a phase 2 opportunity, they'll usually give the market a bit of time to breathe. What they will be doing is they're moving their stop loss up in line with these black arrows, and by the time the market has made a significant amount of movement upwards, they will say, well, actually, I'm not going to leave my stop where these black arrows are. What I'm going to do instead is I'm going to move my stop loss to positive. So if you entered at 22585, you might move it to this level here at 2291. All that means is you've locked in 6 pips of profit. So if the market comes careering back down after this red candle, we're going to be out for at least a 6 pip profit. I've taken all of the risk of my account off of the table. Now, as the market moves sideways, I'm going to keep making my decisions. So I'm looking at this. It's moved sideways and down a little bit. That's fine. Still moving sideways and down a little bit. It keeps going downwards. So I'm looking at this, I'm thinking I can't really move my stop loss up any further. Going to have to leave it down here at that secure position. Some of our traders may look to just close this out. They want to capture that profit and get out of this trade. That's absolutely fine. They'd lock in another 23 pips if they stop out at the bottom of this candle. But we're going to stay at that 591 level. Market starts to move upwards again. Moving sideways, still staying at that low point. It then starts to move up a little bit more meaningfully. So what I would say at this point is I'm going to move my stop loss to lock in at the bottom of this candle here. We've started to move upwards. It's a bit of meaningful movement upwards. So I'm going to use this as my new low point to lock in. So I've moved my stop loss from 591 up to 611. So that's locking in another 20 pips. So from our entry point, we're about 26 pips in profit. Market then moves sideways. Bit of an ugly trade this, but starts to move sideways, moving up again a bit, and then it makes another significant move upwards. So at this point, I'm going to move my stop loss up again to the bottom of this candle down here at 620. Moves up a nice bit more at this point, so I'm going to move it up again to 2.3. You may even look at that and say, well, if my current stop loss is at 2.3 and the market price is at 6.4, you may jump this and even lock in a little bit tighter. 3.6. It's up at 6.4. That's still 30 odd pips of movement, 30 odd pips of breathing room. Market keeps going upwards. Lock in again. New low here at 4.5. Starts to move upwards, but not very much. Going to leave it there. Still moving sideways a little bit. Moves up again. Get it locked in at the bottom of this position. Moves up quite tremendously now. Going to lock in at that new low. These two levels here both about the same, so I'm going to lock in the low of that point there at 6.5. Now, for a lot of our traders, this is where the session ended. So when we were talking about the results from the webinar earlier, you will see in the screenshot, it was taken from a lot earlier. It's taken around here. This is where the session finishes completely. But you see, after that, there was still positive movement in there. You'd have locked in, starts to move up there, starts to come back down. Let that arrow either close you out here using that black arrow, or if it's still moving sideways, you could have actually stayed in it because we never got a double red vector average. And you could have kept that trade running for even longer. So, let's say you came out the black arrow just to finish this video up. You'd finish at 22697 after entering at 22585. That is 112 pips of profit from an 80 pip stop loss. It's almost a 1.5 times risk reward ratio. You'd have made over 2% on that trade. You got in on it at 9.18, and if you got out at the black arrow, you got out at 10.08, so 50 minutes. And like I said, there was actually more room that could have been made on this particular trade. First time that we get our double reds is around here. So there could have been even more pips that were taken out of it. So that's the trade of the day from me. Hopefully you can have a look at one of these in the sessions. If you want to see a little bit more about how we do these kinds of trades, come and watch some of our webinars. Or, we do have our members webinars. You can come and have these trades called out live for you in those sessions as well. So thank you very much, and I will speak with you all again soon. Bye-bye for now.
Want to learn how to find profitable trades like this? Register for our free trading webinar and discover the strategies that turn you into a confident trader. Prefer a more hands-on approach? Schedule a one-to-one walkthrough with a senior trader. See our software in action and get those questions answered, and take control of your trading journey.